Thank you. Have a great day. Hi, and welcome to ECCB Connects. Development in financial technology is changing the way we do business and how we pay for goods and services. We now have automated teller machines, or what we call ATMs, online banking, debit and credit cards, and we're moving towards cryptocurrencies. In this week's program, Fintech developer Straun takes us to the evolution of financial technology, factors that affect your adoption of new payment systems, and poses the question, will cash remain king?
I remembered some statistics that just a year or two ago, 80% of the transactions in the region were done by cash and checks. There is an increasing rate of cash-related crimes. Card transactions, specifically, if you were to look at them, they were conducive. They were not conducive to low margin businesses, so like a gas station that had very low margins, etc., would struggle to accept cards in some cases because the margin already is small, but a bank might charge a high acquiring fee, discount fee, and as a result, therefore, you still have some gas stations who would be reluctant to accept cards because their margin's basically gone. Absence of solutions. If you were to look at CAD solutions, for example, what did you see? CAD solutions, while practical, were only catering to a particular type of business, that is consumer to business. A business couldn't just simply say, hey, let me pay you via your card, and I couldn't say, well, to my son, hey, let me transfer $10 from my card to your card so that you can buy lunch today. So, even in the innovation and the practicality of cards, what were happening, cards were just basically catering to businesses, just consumer shopping. That meant cash had to stay king because cash has the uncanny ability to watch no face and move between any person. A business could pay an individual could pay a business could pay another business, and a person could pay a person. So let's craft this in terms of how do we mimic something like cash. If you look at today, over 80% of homes have internet access, 95% mobile penetration between the ages 18 to 65, and I use 18 to 65 in terms of the ability to enter into contracts, etc. Demographic, approximately 60% of those were smartphones and using. But take it in the context, you had over 800 million cash circulating within the OECS. This is the Eastern Caribbean Council Union. And some 2.7 billion in checks used monthly. Commercial bank wishing to reduce the cost of handling cash, but developing solutions that were basically only to their customers. So let's look at it in terms of how the evolution in financial technology, so to speak, happened. So we had first banks saying, the cost of dealing with persons, so they invented the ABM, the automatic teller, etc. And okay, get you outside the bank. It's less costly to use a machine than to pay an individual. And then they said, okay, let's push it a step further. Why not use your touch-tone phone? So you had phone banking, and that was vogue, or call for help. So we have these call centers, etc. And then they had a credit card, debit card. They said, well, do your transactions, etc. Show up at the ATM, don't come in, etc. But again, limiting the application. So you wouldn't have had significant growth because there's only one type of commercial transaction that could happen. That's basically somebody shopping. And only certain persons with the card who are minority. And then we need to consider not everyone is banked. I mean, many of us think that because I have a credit card or a debit card, or a checking account, that the person next to me also have such privileges. far from reality. And I've had to sit and watch even employer twisting the hand of an employee trying to mandate that they open an account at a specific bank, and the employee is fighting that and say, I don't want to, these are my reasons. And there are some banks, for instance, you watch them too hard, they charge you. And he knows he's getting minimum wage. By virtue, he doesn't want to open that account because not half, but he can't afford it, long and short. So we might think, for instance, yes, in the age of internet, in the age of technology, in the age of everything, everybody would all of a sudden just move en masse to this. And then from online, from the cards, etc., we had online banking, again, only if you have a bank account. And then you had digital wallets. Let's go to cryptocurrency, crypto assets first. And my good colleague spoke about even the speculation, etc. Now, how do I tell an old lady if she were to use, say, Bitcoin, that today she had $10 and tomorrow she has 5? Or today she could buy this and tomorrow she can't. And this is the issue. Because of the speculation in such volatile currencies, this can't in its strictest sense. So what do we need to do? So we have to then, and this is where digital wallets come in. How do I mimic fiat? How do I mimic cash? And why did we say mimic? Because persons need to know with certainty that if they have $1 today, they have $1 tomorrow. That's the biggest impediment, so to speak, for persons to adopt this sort of innovation. Because how do you tell someone that today they had X and tomorrow they don't? I mean, somebody, old people got a tendency that they say they sharpen the cutlass and they come into the bank and something, they just want to see the money. I mean, you as an innovator would have people showing up outside your door thinking that you robbed them and you're gone with their money. So these are some of the issues that we had. So the banks would have been pushing this. First we heard with them pushing, trying to increase efficiency, trying to cut down costs, and so push. And then from business, you have an efficiency landscape. How do I reduce money slipping into people's pocket? We tend to say money half foot. You might think you had $10 and then when you go back you realize, wait, where did it go? Money gone somewhere. In terms of efficiency, in terms of speed and accuracy, then we have security, protection of life and resources. For example, cash crime is up. As I said, cash is a watch no face. So, I mean, you have it, you got to spend it. So it's who have it, spend it. And then cost effectiveness, reduction of the cost of doing business. From the psychological issues that if I am at cashier and I balance and I'm short today, that I might have to put my hand in my wallet or my salary and pay back this because the boss is not going to take a loss. Then from giving back wrong change, from slowing down the transactions, etc., that sort of cost, the business productivity takes a dive. So the things to consider, especially as we move in terms of this innovative landscape, when we talk about the ease of doing business, from whose perspective? The bank, the business, the user. So we see the different issues that push people to use this innovation. The business want to be more efficient, lower the costs. We have heard persons speak about us being on the cost of doing business index. And sometimes we feel like we are sliding. So how do you lower that cost? But from whose perspective? Is that from saving the business money and making bigger profits, or that from the ease of doing business, of how easily a customer can simply execute a transaction efficiently? Who is in control? When it comes to innovation, I tend to argue about who is in control. With cash right now, money just don't jump up out of my wallet and go to the restaurant or the whatever service I'm patronizing. But let's talk about push-pull. So with my wallet, I can physically say, you said $20, I say I don't like it, and I can walk out, etc. One, who puts in the amount? Me or you? So for instance, and this is where you have some of these innovations in terms of pull. So does the vendor say, here's the bill, and then I tap and pay, but wait, I just tap, so which means, I could have been walking past this close enough and the money just jump out of my wallet. You understand? You understand? These are some of the considerations, but these are real. In that, who controls how money jumps or gets into my wallet? Do I have control of the timing? And we were talking about public-private keys, etc. Does it mean that every transaction I have to authorize? Who authorizes? How fast would those transactions be, etc.? These are some of the considerations. Even with contactless payment, what payment models are going to be supported with this new innovation? Business to business, business to consumer, consumer to consumer, or consumer to business? How is settlement happening? When I pay you cash, you have the money. You could turn around and spend it. So in any of these innovations, when we spend this money, can I turn around and spend it immediately? Or do I have to wait for the money to show up in a bank account? Okay, I don't have a bank account. Do I have to wait for some sort of settlement cycle before I could turn around and spend it? And then interoperability. Okay, so I have one wallet, you have another wallet, you have another wallet. How do all of these wallets then? If you take Kenya, for example, considerations that they had to take in, things that they had to consider was, okay, everybody in Kenya must use this. But they didn't but what if I want to pay somebody in the States? Now, how do I settle? This is where cryptocurrencies in some cases, like you use the example of Bitcoin, being able to go cross-border, because you may not have a PayPal account, you may not have access to the banking system. So these are some of the considerations that you have. And then cost of adoption. What roles do the regulators and the current financial landscape players play? Let's take, for example, banks. In order to have access and give some credibility to the system, you may very well need to have a bank account so you could keep the money is backed by cash. But the banks may not play nice. They may basically say, well, we don't necessarily want you in this space, so price you out to the market, or you can't get. So the cost of doing business then stifles innovation. Or the regulators might say, in order to do this, you need this amount of money for licensing fees, or it's not covered by regulation, so you can't play at all. So if you're having these sort of challenges, then it means there's no innovation. So when you ask the question, are we ready? How facilitating is the environment to accommodate this? Are the banks or the established players basically saying, let's create obstacles to make sure that they can participate? And then who would be the arbiter of making sure that? And then the culture lasts. I had an interesting experience where we were presenting a mobile wallet to some bus drivers. And one bus driver asked the question, well, I don't own this bus, but if you accept this digital wallet, will the owner of the bus be able to see who is making the payments? The answer is yes. He doesn't want the wallet. Why? Because if the owner of the bus can't see how much money he's collecting, then the owner might demand more. This is the sort of role that culture plays. So then, do you ask the question, will cash remain king? Thank you.
It's coming.
It's coming.
It's coming.
It's coming.
It's coming.
It's coming.
To view any episode of ECCB Connects anytime, any place, at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects. And now, this week's financial tip.
Hi, I'm Alice Adams Francois from St. Vincent and the Grenadines. Have a financial goal. If you don't know where you're going financially, you may end up somewhere you don't want to be. Whether it's saving for a home, retirement, or a child's education, set specific goals and prioritize.
That's it for this episode of ECCB Connects. Be sure to stay connected with us via Facebook, YouTube, and LinkedIn. Thanks for watching, and join us next week for another program.